always on the basis of the technical analysis. This is one lesson one has to remember. Don't measure risk by price volatility. Price volatility is simple thing is what was the year end last 1 year low, last 1 year high, 52-week high, 52-week low. This is we talk about the range. And some people who are comfortable, they can talk about standard deviation. And some more people who talk about implied volatility. This is out of the options, you can derive the implied volatility and how the implied volatility is there. All these measures are there, so lot of volatility charts are available in the literature. It may be beta, it may be standard deviation, it may be moving averages, or it may be sophisticated techniques like GARCH and all these things are there. But volatility is not the only one risk in the stock market. There are other types of the risks are also there. What is regulatory actions taking place? Suddenly regulator meets and decides that this so-and-so company, NBFC is not doing well, and they put some restrictions, and after the restrictions are put up, the stock price will fall. Is it happened or not? Yes. Regulator is looking in a different way. Regulator wants the people's money to be safe, financial stability to be there, exploitation to be avoided, transparency should be there. So regulator motivations are not volatility alone. Also they look for various other type of the risk characteristics are there. So if you look, I just come back, a new study which says corporate governance attributes are effective indicators of stock crash risk. Why stock is falling down is it is not the price volatility alone, it is the stock governance variables. Governance variables means one of the directors or one of the promoters will sell away larger part of the stock which we don't know at all. And what happens? Or there may be difference in opinions with the governance. Or somebody may be trying to exploit. Technology has fortunately addressed so many types of the risk in the stock market, but unfortunately governance risk is not being addressed by technology. Technology cannot address the governance risk. Governance risk is which type of the people are sitting in the board. Are they talking about, are they in the interest of the shareholders? If a decision is taken, what happens to the shareholders? Board may meet and take a decision that we should go for so and so business, and next day the stock market will fall.
For governance, why not ratings can govern?
Sorry?
For governance, you said governance.
Why
not a rating for them?
Possible, but there are so many other type of the risk which cannot be captured also, which we don't know, because we are sitting here and board decisions are communicated communicated to the stock market. Okay, so I am talking about various types of the variance coming. Variance is a risk only, volatility only, which is coming out of governance factors as well as the financial factors. Of course, this chart is relating to Chinese market. There may be study relating to Indian market also, I am not aware of it. Or there is an opportunity to do similar type of work for Indian market also. Yielding statistically significant, economically meaningful crash risk assessment. So stock prices may fall because of the financial characteristics as well as the governance activities. Dot of mathematics is available. Mathematics is what? You dazzled by maths. It gives a different type of the picture. You will get an optical illusion altogether different. Suppose if you look these charts, you will get circles, but if you combine all these things, you will get different picture. You will see that the cycles are moving. It's not moving exactly. Right. So be careful about it. There is a bias in the market. Expectations bias. Expectations bias is we are all biased to what the analysts has given. It may be earnings expectations. The company will give a presentation on how earnings are expected to grow in the next 1 quarter. But there are more instances where earnings expectations are not being met. For example, 44% of the companies have missed the targets. This is the latest news only, latest quarter. So, Q2 results in the case of 69 companies underperformed or missing the estimates. 41 companies exceeded the 41% of the companies exceeded the expectations. So expectations bias is that earnings estimate or forecast price estimates are given by earnings estimates are given by the company. If you look company's website, investor analyst presentations are available. Next 2 quarters or 3 quarters presentations are available. How much EBITDA will be there, how much EPS will be there, how much price is going to be there. Then you start calculating it is based upon that what would be the expected price. But it is a bias also. That means it may not be met sometimes because of the various reasons. So one should be careful about this part also. Seer-sucker illusion. There are so many advisors, brokers, whether you should go for gurus. There are certified financial planners, investment advisors, insurance agents, mutual fund distributors. Who is the right person for me? What should be my portfolio size? What is my objective? What is my holding period? What is my asset class? And how is the right person to which you have selected? Astro. Nowadays, astrology is also very much popular in stock market. Last few months back, I have attended a very good investor conference. Very good means so many professionals are there. And while having tea, I am interacting with people. One of them have come and introduced, he said, sir, I give stock recommendations on the basis of astrology, sir. You please tell your nakshatra and I will suggest you the stocks suitable. My God, I am shocked. I have not given my nakshatra or I have not given anything to give. The reason is, astrology is also a science, no doubt about it. It has its own scientific foundation. People, learned people or scholars are working in that area. Stock market investment is also a science, but should we combine these two sciences? Should we combine these two sciences? And whether it is going to give a great scientific advice for us. So, you can see what zodiac signs. I have just noted down what is your planet sign, what is your sign, what is your house, whether the price bias is neutral or upside or downside and all that one. My God, this is a different type of field. So be careful about this one before you take a call on the basis of the nakshatra. Today is so-and-so nakshatra, so-and-so time is there, so-and-so this is there. Let me put and click on the net or mobile that I have to buy this stock. But stocks are not driven by nakshatras or astrology. To the best I know, there is no scientific evidence. So be careful about what is this is happening. Whether you should have one parrot or two parrots. One parrot will say buy, buy, buy. Another parrot will say sell, sell, sell. So it is avoidable, better to not to have two parrots, at least one parrot is better. So, don't be duped by AI. This is another devil. Is it doing good? Yes, it is extremely doing good, no doubt about it. It is reducing the jobs also, it is going to reduce the jobs. Lot of financial analysis or investment analyst reports are going to come out of AI or have been coming out of AI. It is affecting the jobs also. But how much is to be relieved? It should be relied. So we have, as Mr. Krupal has mentioned about Ramayana, I will mention about Mahabharata. Okay? In Mahabharata we have a role, one great Rakshasa who fought on behalf of the Pandavas is Ghatotkacha. Yes? There is a wonderful movie also, this has come in Telugu, subsequently it has come in various languages. Maya Bazaar movie is there, where Ghatotkacha is a very lot of fun he does. He has been fighting on behalf of Dharma, Pandavas only, but he is a Rakshasa. So at one point of time, Karna kills him with a great astra. Then Krishna says, don't worry, then to others Pandavas, don't worry, it is a good thing that Karna used his astra here, the Rakshasa is lost. Otherwise the Rakshasa is also a dangerous, Karna using that astra is also a dangerous. Two things are dangerous. So two things are avoided. So now you can fight peacefully. That astra is no longer there, Rakshasa is also no longer there. So artificial intelligence is also a big field. Few days back, ChatGPT stock price has fallen by how much? Anybody followed? Anybody followed? Just I will tell you what is because it has come 2 days back only. I will tell you the stock GPT price, how much it is. ChatGPT is what? ChatGPT, you are aware of that, is a big AI. Yes? So let me tell you what is the price fall. It's a fact. Check this company from being valued at 4.44 billion in 2021, its valuation in 2024 is 0.18 billion. It has gone down by 96%, valuation has gone down by 96%. Which company? ChatGPT company. Check. ChatGPT is company, check is what is it? Yes, AI. So your AI is, be careful about AI. AI driven education, AI driven learning, AI driven, I don't know, doctors may accept it or not, AI driven surgery also may be coming, I don't know. It is there. So this is what the AI driven is, we have. Scammers are now adding people to random WhatsApp groups. Suddenly our name is added to one WhatsApp group and we should start getting so many things. And members are promised to get higher returns and many people have fallen for these fake groups and have lost money. So to be avoided, unless you understand thoroughly, be careful about AI. But if you see the influence of AI on the investment reports, it is going to be generated. Analysis. Even if the balance sheet is given, wonderful ratios to AI will give. If you are giving that data, you will get charts. But there are always some fundamental, some of the inputs which are given by this ChatGPT, they give the references also. And if you try for that references in Google, you don't have that paper at all. The paper is created by ChatGPT and being produced. So be careful about this. Don't torture the data. Data is a very interesting thing. How you use it, based on that results will come. So in academic field, it has become popular to torture the data. Torture the data is you select what data you want, you avoid these things. We call it as data cleaning also. And start getting the what result I want. So put up the data to make that, try to get that results. So there is a book which talks about questions about more guns, less crime. You give guns to everybody, there will be no crime at all. This is what data speaks about it. Is it true that anybody will accept that the guns are there, crime will be less? Should all of us carry guns?
Maybe American concept.
Sorry?
American concept.
An American concept. So this is where data is used in such a way that you are getting a result that if you are using more guns, less crime will be there. Data is tortured in such a way. So which is a very dangerous thing. Of course, several academic people are using this data torture. No doubt about it, I am accepting it openly. Because people will take some select data and will try to present it and apply various types of the techniques and you will get the desired result and publish that result. And as long as scientific ethics, principles and all those things are followed, then it is being published also. So be careful about data being, because the data is the source, data is the oil in the case of the stock market. Without data you cannot light the lamp at all, oil. So data is the oil for the stock market investment. Don't be fooled by things too good to be true. Whether IIM professors or somebody comes and says something, don't be fooled by too much about it. There are so many good things, but good things are always there is a paper which talked about whether really professors will make money. No. Are they good? Yes, they are very good. So passively invest than actively invest. Market efficiency are almost entirely unrelated to their trading behavior. Largely driven by the same behavioral factor as amateur investor. So amateur investor means whoever is starting this one, knowing market efficiency, various types of the theories, techniques, technical analysis, application of the various algorithms, maybe sophisticated technology also, but still, so anything can happen in stock market any point of time. No advisors, economists, TV commentators, nor I can tell you when showers will occur, market forecasters will follow, fill your ear, but will never fill your wallet. This is the final advice given by the Warren Buffett. So, this is my last slide. I am closing with the don't be fooled by things too good to be true. There are so many things which are too good to be true. In our daily life also, not only in the stock market. Okay? So, again, finally, I simultaneously also read other literature like Krupal said, rightly said about Ramayana, Bharata and Bhagavatam and all that one. That is my interest. So in Bhagavatam there is one quotation, one instance is there. In that one line comes, Vittam yavat prayojanam. Because we are doing Arthotsava here. Whatever the money you are earning, it is for a purpose. Vittam yavat prayojanam. If there is no purpose, that means what is the objective? Is the objective is only to make the return, or objective is we have financial goals which I have shown in the slide. So we should have a goal first of all. Who am I? What is my goal? And what is the purpose of it? Here my former colleague Professor Malti Somya is also sitting. I can say that we have good colleagues, even they are not using credit card. They said the purpose is over for credit card. Now I reached 60. I am not traveling. Why should I go for credit card? I was using credit card when I was 30 years or 40 years. That is said by somebody. It's not I am having my credit card. I am not that rich. So, prayojanam, vittam yavat prayojanam. Money for what purpose? And this is to be, we have to, everybody has to keep it in mind, and we do our investment, our daily spending or whatever it is. When it is Arthotsava, I thought this quotation is also a relevant one for Arthotsava, and here I am concluding. Thank you for patiently listening to me. Thank you very much.